Okay, I'm going to talk a little bit about Chapter 4. We spent Chapter 3 talking about uh, journalizing all of our transactions into the 5-column journal. Now we have all that information, and now we need to put it in a way that we can actually see how our accounts have been affected. Not so much how they've been affected, but also knowing how much actually we spent on supplies, knowing how much we've actually spent in rent, how much cash do we have, what were our total sales. And so right now, we can't really tell that. We have all of the information in front of us in the journal, but it's not in a very good way for us to be able to kind of find out that information. How much do each of our accounts receivables, how much do our customers owe us? And in our accounts payable, how much do we owe them? Okay, so you journalize to keep track of all your transactions, show what your business is doing. Now this chapter, Chapter 4, we already talked a little bit about chart of accounts. That's keeping track and creating our accounts and giving them their account numbers, and you're going to see why that's important next. But the next thing we're going to do is posting. So what we're going to do is we're going to take the information from our journal and we're going to put it into something that's called a general ledger. So it looks like this. A general ledger is going to be created, and each of our accounts are going to have their own separate little sheet, I guess, a ledger. And so we're going to put the name of the account and we're going to put the account number. And then what we're going to do is every time there was a transaction that affected a certain account, we're going to go to the ledger account, okay, or the ledger, and we're going to show what happened to that account. And then we'll be able to have a current balance. All right, so these two columns are the transaction, and then this column over here are balances. What's going to be the balance? Okay, and it talks a little bit about T accounts, and yes, we have to know the debits and the credits, but really we've done all of our work in our journal, and I'll show you what we're going to do here. All right, so what is posting? All right, so we have our journal. What we're going to do is we have our 5-column journal. We're not going to worry about our special amount columns right now. Basically, we're going to be working with our general debit and our general credit columns. And what we have to do is we're just going to start from the beginning and we're going to work our way down. And actually, the book is saying to do all the debits and then go back and do all the credits. Excuse me. I think I just like to start at the beginning and work our way down. So anyway, what we're going to do is this is the transaction, and I can look at this and I can say that we bought supplies on account $275, general debit, cash credit. Like I said, don't need to worry about that over there. What we're going to do then is we're going to take this information and we're going to go to the supplies general ledger sheet, and we're going to actually put that transaction in here and we'll come up with a current balance. Okay, so I'm going to walk you through how to do that. I am doing the work together problem that is on page, let's see here, it's 4 dash, I guess it's 4 dash 2. I'm looking for 4-2. Oh yeah, okay, so 4-2. All right, so on page 99, they have our chart of accounts with all the account numbers. And so basically what they've done then is, that's what I did over here is, oh, I forgot. Okay, so what you're going to do is you're going to type in, should be cash. So this is the account, and this is the account number. Now, here's the thing. These would be regular sheets of paper or whatever. They're not going to be just little chunks of information along the side here, but I'm creating all of this from scratch, so because we don't really have a workbook, and so I'm just doing it for some convenience. So this isn't technically what it would look like. Cash would have its own, and it would be like a sheet of paper, like an 8 by 10 sheet of paper or something like that, and you'd have a whole bunch of lines. Same with accounts receivable. They wouldn't just be little pieces like this, okay? So anyway, but for the way we're doing it, this is the way it's going to be. All right, so here's how we do it. I'm going to start right here, and I'm going to start with this $5,000. And what I'm going to do then is I'm going to come over here to my ledger accounts, and I have these all filled out, and I got this, get this information from your chart of accounts. Okay, so the chart of accounts is created. You take that information, you put it into your general ledgers. All right, so I've got a $5,000 credit to capital. All right, $5,000. So I'm going to scroll down here to capital. Okay, so all you're going to do basically, the first part is you're just transferring the information. So I know this is going to be kind of a pain in the butt, but the date is March 1, okay, and we don't need to worry about this item column right now. And I'm going to go straight to the, I'm going to go actually then, it was a credit for $5,000. All right, so it was a credit to capital for $5,000. So I'm going to come right over here and I'm going to put 5,000. All right, and then that shows the transaction. Okay, so that's the transaction. I'm going to put the date. I'm going to put the credit amount, and I got that right from up here. I'm going to just copy that down. Okay, now what we're going to do is we've got balance. This is why we post. All right, so this is called posting. And what we're doing is we're taking all of our information from our journal, putting it into these general ledger accounts. So that's called posting. And the reason we do it is so that if I was the bookkeeper for my business and somebody called up and said, how much do you have in drawing? Or what's your balance for prepaid insurance? Or what's your balance for accounts payable Joshua supplies? Well, I could look, and right over here is going to tell me my balance. All right, so we need to know what our balances are in our accounts. So right now we're doing this for the very first time. So we have no balance in capital. So 5,000 plus 0 is 5,000. And if it's a credit here, it's going to be a credit over here when you're adding. It's just like kind of positive and negative numbers. Okay, the other thing, this is why you're going to need to know debits and credits. Capital is has a normal balance side as a credit, and we increase capital with credits, we decrease with debits. All right, and so we're increasing our capital amount, and so that's why it's going to be a credit also. All right, so and I bring over 5,000 because, like I said, it's 5,000 plus 0 is 5,000. Now here's the account number 310. So here's what I'm going to do. Like in accounting, there's always, you're always cross-checking. We have source documents. We're always showing where things are. Well, that's what we're doing. This is the capital account that was affected with this transaction. It was a receipt. We received money. And the post reference now, this 310 tells the accountant, bookkeeper, okay, tax auditors that this 5,000 got put into this account. All right, so that's what you do. All right, so let's go down to the next one. Prepaid insurance, $660. So I'm going to go down here to prepaid insurance, and the date is March 3rd. I don't need anything in this item. I'm going to come over here to the post reference, and I'm going to skip that. And prepaid insurance was $660. So I'm going to put 660. And again, these are all the first time transactions. So they're just going to be 660 plus 0. And that means it's 660. Now, I'm going to put this as a debit. And the reason that I'm doing that is because prepaid insurance is an asset. Assets have debit balances. you increase assets with a debit, and that's what we did, and so it's going to be a debit balance. All right, and then it's account 140, so I'm going to come back up here and I'm going to do 140. All right, then my next one is, you need to hit enter. Okay, so the next one then is supplies for $78, so I can just come right down here, and it's March 4th. And again, I'm going to go straight to the transaction, and it was a $78 debit. And again, 78 plus 0 is 78. Now, don't think, and all right, so that's that. So it's 130. I'm going to come back up here, and I'm going to do 130. All right, I'm just going to go to the next one. $78 credit to accounts payable. So I'm going to come down here to accounts payable. All right, and that's going to be March 4th, and this time I know it was a credit to accounts payable, and it was 78 because we bought this on account. So again, $78 plus 0 is going to be 78, and if it was a credit here, it's going to be a credit over here. All right, and then it's 210. So I'm going to come back up here. And now the other thing about doing this, this post-reference should be the last thing that you do, because then if I get called away right now with a phone call or something like that, I know that that's the last one that I've done. All right? You don't have to then guess like, oh my gosh, which one did I do by just filling these in? Because technically right now I know all the account numbers and I could just fill them in right now. But by doing it one at a time, you can keep track of where you're at. Now this one, we know that both of these numbers are in your special amount column, so we don't have anything here to post. So I'm just going to do the little V, and actually you can put that in there at the time that you do this transaction. All right, I'm going to skip down to this accounts payable, because this is the next this is another accounts payable, and I want you guys to see what it looks like when you have another transaction, because so far we've just done one. So we paid $50 to our accounts payable. So I'm going to go down to our accounts payable, and I'm going to put in the date. So accounts payable is going to be March, and you actually don't have to do that. It could be just the 15th. Either way. All right, so this time I know that that was a $50, oh, I'm forgetting a step, $50, and so now I have a $78 balance right here, and I'm paying off $50 of that. So since accounts payables have credit balances, I know that a debit subtracts. Okay, so I'm going to take 78, I'm going to subtract 50, but here's the thing. We still have a credit balance. 78's the bigger number. We actually still owe money, so I'm still going to maintain a credit balance. And to be honest, for accounts payable, because they have a credit balance, they're either going to have a credit balance or a zero balance, okay? And then I'm going to take that 210, and I'm going to go back up here to this accounts payable, and I'm going to do that. Now, here's the other thing that I forgot. We are on page 1 of the journal, okay? So what we need to do is, every time in this post-reference column, we need to be putting the page number of wherever we're getting this information, because this is just random, like, oh, okay, March 4th, well, what? And like I said, in accounting, you always got to go back and forth. So every one of these should just be a 1 for page number 1. All right, now I'm just about out of time here with my video, but that's basically posting. You're just going to start here, and we're not going to worry about anything down here, and we're not worrying anything about that. We're just posting the individual amounts in the general debit and credit columns.